Redefine Properties Group CEO Andrew König joins us now. Thank you so much for your time, Andrew. Elevated inflation concerns flagged. Do tell us to what extent this is having an impact on the group's entire units.
Good evening, Tumisang. The issue with elevated inflation isn't necessarily a business issue. It's more an interest rate issue, because the longer the inflation rate remains elevated, the longer interest rates will remain at current levels. And for Redefine, it is very, very important that we do start seeing some interest rate relief, which will turn the dial considerably on a number of fronts, not just from a finance cost point of view, but simply from a tenant health perspective, which will translate into market rental growth. And then also from an asset valuation point of view, where we reference our valuations of the long-dated government bond yields. So for us, interest rates is absolutely vital to turning the fortunes for Redefine into a positive momentum going forward.
And in which part of the group's business are you feeling this the most? I would understand that the commercial residential property space is where the pinch is even worse.
Yes, Tumisang, the real pinch at the moment is on the office sector, where we are suffering from a lack of new demand as a consequence of sluggish economic activity here in South Africa. But then also similarly, you know, the oversupply that was created in the build-up to the pre-COVID environment has also led to a perfect storm for the office sector, in that you've got an oversupply and then you've got a lack of new demand, which means there's pressure on market rental. So if there's a pressure point, yes, it is on offices, but we are getting positive change and momentum in that sector, given that Redefine has repositioned itself to have 95% of its portfolio exposed to premium and A-grade properties, and roughly 50% of our reversions are actually either flat or positive. The other 50 is negative, and that is what is dragging us down at the moment.
A tough operating environment indeed, but are shareholders satisfied, especially with the decision that's been made on dividend?
Look, I think it's a very tight rope we walk when we come to dividend decisions. So Redefine has a payout policy of paying out between 80 to 90% of its distributable income to its shareholders. We opted this time to go for the lower end of that payout policy, given that we do have pressures on our interest cover ratio. And also, you know, in the build-up to the election, there's always a bit of uncertainty. So just to allow us a little bit of a buffer, we've held back a bit on the dividend, but we hope to make it up in the second half.
Speaking of that uncertainty, as we build up to the 2024 elections for the property market, especially where economic policy and monetary policy are concerned, what's the expectation from the sector?
Well, I think for now, we're in a holding pattern. Unfortunately, with the build-up to the election, there will be policy inertia. And I think we are really just, you know, as I said, working on the variables under our control to make sure that we are well poised for the eventual interest rate relief that we all need.
As a parting shot, what's the near-term outlook on performance in the current South African economic climate, and any plans of further growth in acquiring more assets?
So, Tumisang, to grow at the moment is tough. We have a limited amount of capital available to us. The capital available to us is through recycling or selling non-core assets that free up capital for reinvestment into assets holding better growth prospects. But from an income and a distribution point of view, our guidance is at this point is to be flat with last year.
Thank you so much for your input. That is Andrew König. He is the Group CEO of Redefine Properties, having delivered fair results with a flat dividend for the 6 months ending in February.